Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In today's video, I will be speaking about order flow in Forex trading. Specifically, I will, in the first part of the video, speak about the order flow and the commitment of traders and how by looking at the orders of the non-commercials, which are the biggest speculators in the market, we can understand where we have the highest probabilities of seeing a potential move in the market. And then, after I showed you what you're supposed to be looking for when it comes to the order flow, we will move to the chart and we will use a combination of order flow and chart analysis to identify reversal zones in the market. So I will show you what you have to look for in the order flow and on the charts to identify a zone in which you have a high probability to see a potential reversal. So this will be a very interesting video, and I do suggest that you stick to it till the end. So without further ado, let's get straight into it. Okay, so first of all, let's start from the order flow side. So the commitment of traders. Now, what we have to look for here. Now, a few things that I definitely want to point out. First of all, what you have here on the left is the date of the report, and then you have longs and shorts. Now, this is the amount of longs and shorts at every specific moment in which we have the data, showing you how many longs institutions have in total. So adding up all the longs and shorts, how many they have in total. Now, from here, you can immediately start to understand what is the overall trend, right? Are they adding longs and closing shorts, or are they closing shorts and adding longs? Now, what you have to keep in mind also is that all currencies on the spot are traded against the USD. So if you take, for example, the euro, you already know that on the spot, the euro is traded against the USD. So if you're checking the data for the euro, you're actually already checking euro USD. Now, if you look here at what is going on the longs and the shorts, you can look at these two specific columns separately. And you will see that lately what we started seeing is that longs were getting increased. First, we had 196K, 202K, 226K, 239K. Now we're starting once again to slightly get decreased, but overall the trend was clear. Shorts, same thing. It is very clear that shorts were getting decreased. We went from 158K, 154, 51, 133K, 124K. Now, it can be a little bit confusing when you're looking at the longs and shorts separately. That is why I also have the net positions column here on the right. The net positions is a simplification of the process of looking at the longs and the shorts. If you're looking at the net positions and they are increasing, then you already know that essentially what is happening is that longs are getting opened and shorts are getting closed from an institutional perspective. So if net positions are increasing, you already know that this currency is getting bullish. If net positions are decreasing, then you already know that that currency is getting bearish from an institutional perspective in the institutional eye. Now, you might be asking yourself, okay, but why does it take so much time for institutions to actually move their positioning? That is because they have massive orders. And as you know, in the market, for every buyer, at every specific moment, there needs to be a seller. So if they are looking to buy and there aren't enough sellers at that specific time, they will simply start filling partial orders. So that is why it takes a long time for them to shift all their positioning. Which brings us very soon to the second part of the video, in which we will see how if you are in an area where you're starting to see a reversal pattern from a chart perspective, and on the institutional side of the market here from the order flow, you see that institutions are buying and closing their shorts, then you have a high probability of seeing a reversal and rejection away from that area. What you can also see here is this specific amount of longs and shorts that are getting opened or closed. Here you can see the ones that are getting opened, thousands of longs getting opened, and thousands of shorts getting closed. Now, since I'm looking here specifically at Euro USD, I want to show you how looking at this data translates into looking also at the charts at the same time and putting the two together to identify a high probability reversal area by also looking at the price action that the market is showing. For example, the best time frame when it comes to identifying reversal areas in the market is the weekly time frame if you're using it in combination with the order flow. Here you can identify areas in which you have a high probability of seeing a reversal from a bearish market to a bullish market. Why is that? Because also the reports are coming in weekly, the data is coming in weekly. So if you're looking also at the weekly time frame and you have, for example, the data that is getting very bullish and the technical side of the market as well, which is getting bullish, that has a high probability of indicating that you have a good probability of a reversal in the market. For example, if we have to study what happened here, okay, what happened at this area? We go back here. Now, let's say you have this situation on a chart. You have a market which clearly was moving in a downtrend, and the definition of a downtrend is a market which is creating a series of lower lows and lower highs, right? You have low, lower low, high, lower high, right? Now, that is clearly what was happening here. We had a market which clearly was creating lower lows and lower highs. However, here the market stopped doing that because we went from creating a lower low, lower high. However, the market then failed in creating a new lower low, rejected to the upside, so printed this double bottom, broke above the previous resistance, so the previous high, which at this point was turned support here. So what you have here is a market which is currently testing previous weekly support here, which was turned resistance here, which is now again turned support here. So effectively, you had a break of structure from a technical perspective, from a bearish market to a bullish market. So from here, you expect a rejection to the upside, right? At the same time, what was happening from an order flow perspective? Now, in this period, what you could clearly see here is that institutions were adding longs and closing shorts. Now, you can do that by looking directly here, as we did previously. We were seeing that longs were getting clearly added, going from 196K to 239K. However, at the same time, shorts were getting decreased massively. We went from 254K all the way down to 133K. However, an easier way of doing that, instead of looking at specifically every single report, how many longs and shorts are getting opened and closed in total, we could easily go and check the net positions. And what we could immediately identify is that we were going from having a negative net positioning here of minus 47.6K net positions with 249K shorts compared to only 202K longs. So more shorts than longs on the institutional side, all the way up to having a positive net positioning of 100 and in this case 5K net positions with 239K longs compared to only 133K shorts. So we went from having way more shorts than longs to now having way more longs than shorts on the euro from an institutional perspective. And keep in mind that if you're checking the data for the euro, as we identified also earlier, you are actually checking euro USD because all currencies on this spot are traded against the USD. So what we were having in this specific case is a market which was shifting from a technical perspective from bearish to bullish on the weekly time frame, and the weekly reports were also showing very strong aggressive buying pressure from an institutional perspective. So institutions were clearly longing Euro USD, and the market was shifting from a bearish structure to a bullish structure. This is a situation in which clearly your bias is supposed to be bullish because you have all the factors, so both technical and order flow, indicating that we have high probability of a reversal to the upside. So you would be looking predominantly to the bullish side of the market. And in fact, what we can see is that after that, the market started pushing quite aggressively to the upside, right? Now, let's take another example of this. For example, a pair that lately reversed was USD JPY. Now, if we go and see what we have on USD JPY, we can see that we had this massive reversal to the downside. Now, if we go and see what was happening at that specific time from an institutional perspective, we have to check the data for the JPY. Now, in this case, as for previously for Euro USD, if you're checking the data for the JPY, you're actually checking JPY USD. So if we want USD JPY, we simply have to reverse everything. What we can see here is that lately what started happening is that net positions started increasing, right? So overall, what we were seeing is aggressive buying from an institutional perspective with increases in longs and decreases in shorts. In this case, we had a massive decrease in shorts, specifically from 140K to 112K. We can see here 22K shorts getting closed, minus 5K shorts getting closed. So what we were seeing by simplifying and just looking at the net positions is net positions getting increased. Now, an increase in the net positions for the JPY means that the JPY is getting stronger, right? But if the JPY is getting stronger, USD JPY is getting weaker. So what this means is that institutions were adding shorts here and closing their longs on USD JPY. And in fact, that is exactly why the market reversed here. We can also notice how in all this move to the upside, we already had a reversal pattern in play. In fact, we had this overextended W formation, which was already in play, with institutions here at this area, with these 3 candles here, adding a lot of shorts and closing longs on USD JPY, meaning that overall they were adding longs and closing shorts on JPY USD. So everything also here, like for the previous example of Euro USD, was lining up perfectly. We had institutions shorting, and from a technical perspective, a reversal pattern from a weekly perspective. So if you're looking at your bias in the market, I really suggest that you take these concepts and you work on them and work out something that works for you. I really suggest to look at reversal patterns on the weekly time frame combined with the weekly reports of the order flow from an institutional perspective, because the smart money in the market most of the times is right. So the big institutions most of the times are right. So if you see a reversal pattern on the weekly and you also see institutions adding shorts or longs, depending on what pattern it is, then you have a good probability of seeing a potential reversal in the market. Now, if you want to learn more about all my methods and courses, you can find everything at transparentfxtrading.com. So I really suggest that you go and check it out. I have a full mentorship program there. You find all the details on the website. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. And I will see you in my next video.